Hello fellow investors, in this video we're going to review Tesla. First we're going to look at different valuation scenarios for Tesla stock. There are several different ways you can measure the fair market value of Tesla. Then we are going to switch to the technical chart review. After which we're going to look at major fundamental factors that can affect Tesla valuation metrics, and in the end we're going to compare Tesla to Bitcoin and see if there are any similarities. So let's start from the valuation metrics. To have a base for valuation, we need to look at Tesla's financial statements and to arrive to the proper metrics. So let's first look at the revenue growth. So total revenue growth year on year, we're looking at the third quarter 2022 financial statements. So we year on year revenue growth is 56%, which is absolutely astonishing number for such a big company. Looks great. Okay, excellent. Now let's look at the earnings. So earnings actually grew almost 100, well, over 100% if you are using GAAP measurements, and non-GAAP measurements grew by 75%. So we have astonishing revenue growth, we have astonishing earnings growth. So things look great. So now let's switch to the actual valuation measurements. So valuations. I will review three scenarios. In the first scenario, let us assume growth rate of, let's say, 25% over the next 10 years. I'll also assume conservative, according to the current metrics, a terminal multiple of 20. I suppose it would be more conservative to assume like 16 or 15 terminal multiple for a good company, but good and big company on in S&P 500. But I'll assume less conservative 20 terminal multiple of 20. So with these metrics and assumed 25% earnings growth over the next 10 years, we get the current fair market value of $248. My other assumption is that the company is going to generate $4 of share in net income in 2022. However, as we've just looked at the third quarter 2022 report from Tesla, the actual earnings growth was more like 100%. So if we go to 50, let's say 50%, again, more conservative growth than was achieved during the past 12 months period, then the current fair market value of Tesla should be $1,160. And in 2033, the Tesla should be worth $3,000. So obviously, according even to these metrics, 25% growth, currently shares are undervalued, and again in 2033 your investment should be worth $600. So it looks like a very a decent investment. However, if you were to assume that the sales to slow down and that the market is going to experience some level of disruption at present due to maybe increased competition and maybe lack of purchasing power from the consumer side, then if you assume 3% earnings growth over the next 5 years, then and 15%, and that the economy is going to go better in about 5 years, and is going to, and the company is going to generate a very good profit growth of around 15%, then the current market value of the company is 64. Or, again, I decreased terminal multiple because these multiples decreased, so I would assume that the terminal multiple that the market would assign to Tesla would also go down. So again, we are looking, in this scenario, we are looking at the slowdown in sales. I do understand that the Tesla is finishing up building some new factories, so that sales may not stagnate even in bad scenario, but this could go both ways. In a really bad scenario, let us say that consumer purchasing power really deteriorates, and the consumers are already saturated with Tesla vehicles, and the sales net income is going to drop because of inflationary pressures and interest rate pressures on the consumer. So let us assume that for the first 2 years, the company is going to actually generate losses, that the economy is going to enter into a recession, and the company is going to generate loss. Well, its income is going to go down 15% in the first year, and in 2023 and 2024. So we're assuming that the income generated in 2022 equals to 4, then in 2023 it's going to be 3.4, and in 2024 it's going to be 289. And after that, I'm going to assume that we're going to have a recovery, and income is going to grow at the rate of 10%, and then company's income is going to grow at a rate of 15%. So I'm assigning to the company again terminal multiple of 15, and then we get the value of just $52. If you want to see it, $53. This is also quite a realistic scenario, because if we enter a very steep recession, the Tesla may actually generate losses in these years, not incomes. So things may actually get worse than this. So if I, for example, put this number at, let's say, 50% loss of decrease in income, then, well, we can actually get this number, $19.02, the current market value, and the value at in 2033 of just $35. So to me, it's extremely difficult to value Tesla, because yes, they're building a few factories, they're expanding their production, and however, if you also compare Tesla, for example, to Ford, I think it's to Ford's price to sales ratio, I think it's undervalued, like overvalued compared to Ford, 97 times. So it all depends on how you view future growth. If you assume that the future growth is going to be 60% over the next 5 years, and maybe it's going to slow down over the next 5 years, well, then the company is severely undervalued, and the current fair market value of Tesla should be $800. However, if you believe that we are going into a steep recession, and then current value of the company is just $19. Let's look at Tesla's technical chart. This is a weekly chart. This is February 2020, the start of the pandemic, and the Tesla stock crashes. Now, at this point of time, the federal government starts printing a lot of money. And so this money, it looks like, went into Tesla. Now, when we look at major fundamental factors that could be affecting Tesla price, it's the money supply. So now during the time we built a head and shoulders formation, and this is the neckline for the head and shoulders formation. We broke down below the head and shoulders formation, and now we are trending down. Theoretically, the target price of the head and shoulders formation is this area. So theoretically, according to this chart, the target price of this formation is $20. The level that we reached in 2000 and in February or March 2020. So things are not looking very good. It's about, well, $20, $27, $30. The closest support level, it looks like, is around $150. The next support level is around $120, and the following support level is at $60. So major fundamental factors affecting that could be affecting Tesla's valuations. I suppose everybody remembers that interest rates are exceptionally high right now. They are at the level that they were pre 2008 market crash. So it is with very high probability that the US economy may enter a recession, which is going to affect purchasing power of regular people. Then the other problem is inflation. Inflationary pressures are also affecting the purchasing power of regular consumers. Third factor is the reason why Tesla generated such high growth is this is M2 money supply chart. This is the growth of money supply during the pandemic. So this growth in money supply actually fueled people's spending, exuberant spending behavior. Now that the Federal Reserve has started raising interest rates, money supply has started to go down. So there is actually less money starting to chase goods. So Tesla, I would imagine at this point, is a luxury good. $100,000 car is definitely not something that an average consumer, I would suppose, is able to buy, maybe willing to buy, but not able to buy. So with having less and less money, I would assume you would spend less and less money on luxury items and spend more of your more of your purchasing power on the goods that you actually need. Now, it's quite interesting to look at a Bitcoin chart and compare it to Tesla chart. This is a Bitcoin weekly chart. Again, Bitcoin went down during the start of the pandemic, and then when the government started printing a lot of money, increasing the M2 money supply, well, Bitcoin started going rapidly up, stratospherically up. So consumers had a lot of more money. They didn't know, they were sitting at home and they didn't know what to do, and they were buying stuff or investing their not very hard earned money into different investments like Bitcoins or Tesla stocks. So here we had the increase, and now since the government has started raising interest rates, Bitcoin started and the money supply started to dwindle, the price of Bitcoin started to drop down. I am indicating, so again we built a head and shoulders formation, and I didn't extend this line to this level, although I had to, because well, according to this chart, the final price of Bitcoin should be zero. I don't know where Bitcoin is going to end up, and it's hard for me to believe that it's going to be zero. I have no idea where it's going to stop. I can only say that it is going down, and that the next support level is currently at 12,000. And it looks like, according to this formation, it looks like the next target price for Bitcoin is probably around 170 or 200. So Anyway, I just wanted to look at Bitcoin's chart because it looks a lot like Tesla's chart, and in a way you could also say that it could be a leading indicator to what could be happening to Tesla. Again, there is no doom and gloom if you believe that the sales are going to increase at stratospheric rates, and the income is going to go up. You are quite safe, and Tesla stock is actually quite undervalued currently. It should be priced around $800. However, if the metrics are going well, if we are entering a recession and consumers are going to buy a lot less Teslas and they're going to have a lot less money, then you could be looking at very, very, very different numbers. So it all depends on how you see these scenarios. I personally am more inclined to view things like this, but that's my just personal vision of things. If you like this review, please like my video, subscribe to my channel, and I'll keep posting more interesting videos, and I'll be looking for interesting investing opportunities.